Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at 3 strong buy dividend stocks. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we're combining my 2 favorite things in investing, dividends and growth potential. We're looking at 3 stocks that all pay a dividend and analysts rate a strong buy with some pretty attractive double-digit upside potential. We're going to take a look at these companies, what it is that they do, and what analysts are predicting for their stock's future. Just before we get into all of that, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. All right, now I came across these 3 stocks using the TipRanks Stock Screener. With the stock screener, I searched for a medium to mega market cap, any type of dividend yield, an outperform rating on the TipRanks Smart Score, and a strong buy best analyst consensus with upside of over 20%. Then I picked a few that jumped out for me in the list below. So the first stock from that list that we're going to take a look at today is called Silicon Motion. Their stock trades under the ticker SIMO, currently priced at $70.67 per share. They pay a quarterly dividend of 50 cents per share, which works out to a dividend yield of 2.11% compared to the sector average of 0.7. Their next ex-dividend date is coming up soon on November 8th for payment on November 23rd. Silicon Motion is a global leader in developing NAND flash controllers for SSDs and other solid-state storage devices. They have over 20 years of experience developing specialized processor ICs that manage NAND components and deliver market-leading high-performance storage solutions widely used in data centers, PCs, smartphones, and commercial and industrial applications. Their SSD controllers are used by numerous brands around the world, and today they account for more than 30% of the total global client SSD market. Their SSD controller solutions break the boundaries of SSD performance, delivering ultra-high performance with state-of-the-art low-power design. Silicon Motion recently reported their third quarter earnings on October 26th. Their net sales came in at $254.2 million. That was up 102% year over year. Earnings per share came in at $1.70, which outpaced analyst estimates. The company achieved their 3rd consecutive record quarterly revenue and earnings per share, and reached $1 billion in revenue run rate, coming in a quarter ahead of their plan. They also launched the world's fastest single-chip controller for external portable SSDs. Weighing in on the Silicon Motion stock is analyst Mehdi Hosseini from Susquehanna. He commented that he was updating their estimates and price target following the 3rd quarter earnings and upgrading the shares from neutral to positive. Although the stock is up 40% year to date, they see another 30% upside from here, simply due to increased conviction of the path towards annualized earnings per share of $8, driven by a mix of market share gains and modest growth in commercial NB. He is one of 4 analysts that currently have a rating on the Silicon Motion stock, and it does come in as a strong buy based on 3 buy ratings and 1 hold. Their average price target comes in at $99 per share. That would be a growth potential of 40% for this next year. On the low end, we do have a hold rating from 3 months ago with an upside of 10.5%. The most recent ratings range from an upside of 27% to a high of nearly 63%. The second company on our list today is the Pulte Group. Their stock trades under the ticker PHM and is priced at $48.31 per share. They pay a quarterly dividend of 14 cents per share for a yield of 1.15%. Their most recent payment came out on October 4th, so we're still a couple months away from the next. The Pulte Group is in the home building business, and since their founding 70 years ago, they've delivered over 750,000 homes. Today, they are ranked the 3rd largest home building company within the United States. The company has operations in 23 different states across the country and 42 major markets. Through their portfolio of leading brands, including Centex, Pulte, Del Webb, DeVosta, John Wieland Homes, and Neighborhoods, they're uniquely positioned to serve buyers at every stage of their lives. The Pulte Group shared their 3rd quarter earnings report on October 25th. They saw 3rd quarter earnings per share of $1.82, which came in ahead of analyst expectations and well above the prior year's adjusted earnings of $1.34 per share. Their home sales revenue increased 18% to $3.3 billion, and they saw their Q3 closings increase 9% to over 7,000 homes. Also in the quarter, the company repurchased $261 million worth of common shares and paid out $37 million worth of dividends. They ended the quarter with $1.6 billion in cash on hand. One analyst covering the stock is five-star analyst Anthony Pettinari from Citigroup. He says that supply constraints are masking underlying demand strength. PulteGroup's industry-leading margins and careful approach to land buying leaves the company well-positioned for 2022 as community count ramps and supply chain constraints ease. He is one of 7 analysts that have a rating on the stock, and it comes in as a strong buy based on 6 buy ratings and 1 hold. Their average price target comes in at $68.71 per share. This would be a growth potential of 42% for the next year. Looking at our detailed list of analyst ratings, we do have our hold rating on the low end, which would still be an upside of nearly 20%. Looking at the most recent ratings, we have several ranging around the 44 to 52% upside mark and a high-end price target of $86, which would be growth of 77%. And last but not least on our list today is Viacom CBS. Their stock trades under the ticker VIAC, currently priced at $37.18 per share. They pay a quarterly dividend of 24 cents per share for a dividend yield of 2.57%. Their next ex-dividend date is coming up on December 13th for payment on January 2nd. Viacom CBS is a diversified, multinational mass media conglomerate. The company owns and operates broadcast television stations and provides cable network services, including subscription and free streaming TV platforms. This includes Paramount, Pluto TV, Showtime, and CBS. In their second quarter, CBS was the most watched network in prime, daytime, and late night, and claimed the quarter's top broadcast series, top 3 dramas, top 6 comedies, and top news magazine. They're working to expand their global footprint, with 25 markets expected by the end of 2021 and 45 markets expected by the end of 2022. They are seeing a ton of growth in their streaming revenue as well. In their last quarterly earnings report, that streaming revenue was up 92% year over year to $983 million. Their streaming advertising revenue was up 102% year over year. Their next quarterly earnings report is due to come out today, November 3rd, in the after hours. Analysts will be expecting an earnings per share of 76 cents. The Viacom CBS stock does come in as a strong buy based on 6 buy ratings and 2 holds. The average price target comes in at $62.63 per share. That would be an upside potential of 68.5%. Looking at the most recent ratings, on the low end we do have a hold with an upside of 18%. On the high end, we do have an $80 price target from Laura Martin at Needham, which would be an upside potential of 114%. So it'll be interesting to keep an eye on that earnings report this evening and see how the analysts weigh in following it and if they maintain their bullish outlook. But there are our 3 dividend-paying stocks, all rated strong buys with some pretty attractive double-digit upside potential. Now you guys know I always love hearing from you, so let me know your thoughts on these 3 stocks in the comments down below. Were they already on your radar, or what are some of your other favorite dividend growth stocks? Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence before making any investment decision. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. Have a fantastic day, and I'll see you back here next time.